Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Wednesday, May 18th, 6:21 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Quick look at futures. Bitcoin flat. Oil up 1.3%. Stocks were trading down a little bit this morning. They've recovered a little bit, down about 0.25%. Copper's flat. Nat gas down about 0.75%. Over on the macro front, we've got housing starts, oil inventories at 10:30, and a 20-year bond auction at 1 p.m. On the earnings front, follow-up reports after Walmart and Home Depot. We got Target and Lowe's this morning, along with discount retailer TJX. That'll be interesting. This afternoon, after the bell, we've got Cisco and we've got SQM. That is I'm not sure if it's Chile or Argentina, but a big lithium miner. That might be interesting for those interested in the resource space. Also want to thank you guys for your patience yesterday. I had a meeting outside the office before the bell, and then of course I missed the open and got back and all that kind of stuff, so I appreciate that. So let's dive in. I want to take a close look at this Walmart rollback that we had yesterday. If there was one retailer I thought that would do really, really well in this environment, would have been Walmart. Those ideas were obviously misplaced. They had a horrible report. Worst day in literally 40 years since 87 kind of thing. Incredible. What I've done here is given you the bracket trade setup. We've got a huge gap above. We've got the bracket created yesterday by the trading range between 130.64 and 137.44. I've got a support level down here at 127, and I'll show you the weekly chart here in a second. But just as a quick recap, on these bracket trades, you can get long at the bottom of the bracket if it holds, and look for your first move back up to test the top of the range. Your grand prize is if you get a gap entry and then a fill. And then the other way, if it breaks below yesterday's low at 130.64, then my first target is 127. So that sets up really, really well for a bracket trade. And during earnings season, you can't track them all, but if you do a simple sort on your platform, most of them have it, your charting platforms or your trading platforms, you can do gaps up and gaps down at the end of the day, and you can put whatever criteria you like to see on the returns, whether that's a minimum price or a volume. I usually I don't want to see stuff below $10, so I go over 10 and over 500,000 in volume. But that's a very simple sort. You can add all kinds of things into that sort if you like. But I wanted to show you also the weekly chart just to point out a couple of things for you aspiring technical analysts. This just reaffirms a lot of the things that we've been saying for forever, but I wanted to drive home the point. Had a big trading range between about 133 up to 150, been in it for years. We had the breakout, but then that breakout stalled at 157.50. And you can see that stall in your candlesticks. We had 2 weeks of dojis. And what a doji signifies, if you dive into your candlestick analysis patterns. A doji just means indecision, a hesitation. It doesn't mean it's, it just means that. It's a hesitation. But if you're in an uptrend and then you get a hesitation for a week or two, that should give you pause. Like, why isn't it following through? Have the buyers dried up? What's going on? I don't think it's an outright, oh my God, we got a doji and, bail out and get short. I don't think it's that. But when you see something like a double doji or a single, just making the point, it hesitated for 2 weeks, and then you see that following week down bar, that's certainly cautionary. And then the follow-up week back down to 150, that's your fail-safe level. If it was a breakout and a back test, that's fine. Happens all the time. But then that level's got to hold, because you break below. That means this was a false breakout. A false breakout on the top is a bull trap. Anybody that bought in here, once it broke below 50 or 150, they knew they were wrong. They were trapped. They had to sell. And what you'll often see, well, number one, you move into an old trading range. After breaking out, where's your target? The bottom of the trading range, down here at 133. You don't always see that in one fell swoop, but the catalyst was earnings. And also, you'll often see this phenomenon, a fast move from a false move. You get a fake breakout, and then they break it hard the other way. So if you can, time that right, that can be very lucrative on the downside. I had actually, I was playing Walmart in here long. Then on this little ramp, I sold. I went out in June and I sold like 135, 130 put spreads and collected some premium. I said, oh my God, this thing's at 160, defensive name, selling puts $30 below, should be safe. When it started rolling over, not yesterday, but back in here, I got a little panicked. I was looking back here and saying, well, I got the 50, I got the 200, and when it started rolling over, I said, man, I had a bad feeling, and I'm glad I got out of it. So, anyways, just a couple technical things on Walmart. Now, if you got to move down here, you've got a level that goes pretty far back, but it's got to hold 127. Otherwise, you got a range down here that could take it all the way back to 115, and that's that pre-COVID high that we've been talking about. Quick look, Target this morning. Over the last couple of weeks, has lost all the moving averages down here below everything, so it's not looking too great. Maybe it has a great report, maybe it doesn't. Home Depot had a good report yesterday, but if you dive into the numbers, their transactions were down about 9%, but their average ring was up 11%, probably seeing that, inflation. So one thing you got to consider on these retailers, with inflation raging, their top line is going to be supported, because they're raising prices in the store. So this is an environment where you got to kind of look past the top line, look how much they're making, look at their traffic count, look at their margins, and that'll tell a more complete picture of how they're doing. So Home Depot here. Here's Lowe's. Got a little lift yesterday, but you can see in a pretty pronounced downtrend. Lowe's, I think, has to hold this 180 level. Otherwise, you got a big volume over price bar here down towards 150. And again, that pre-pandemic high is all the way down at 120. So we'll have to see how those go. So let's jump back into our regular mix of internals, indexes, and FATMAAN names to take a look at where we're at after yesterday's nice rally. On my extremometer, put to call ratio inverted. You can see yesterday they were buying calls, which is expected. The big question now is not so much here, but can we extend the rally? So let's look at our oscillators. Took a big jump yesterday up into this 20 area. What I was thinking yesterday at the close was, man, this thing is set up for a flash move to 60, which would be a perfect place for us to recycle out of our longs back into a short outlook. That would hopefully, that if we got it, that flash move would correspond with a move in price up into a well-defined resistance area. And if we got that combination, overbought oscillators combined with price at resistance, that's a good risk reward to rotate out of our longs and get then shift our bias to the downside. Here's the NYSE oscillator, same thing, plus 25. Let's see if we can get a run into 60. VIX. I think a key level right now is 25. You can see that we are up in this 35, 37 range. It has just let go over the last several days. 25 is a good level of support. You can see support here, resistance, resistance, resistance. So 25 is a key level. If VIX can break below that, I think that would bode well for a continued rally. Keep that on your board as well. It's been working great for me, keeping it up as a chart rather than just a number on a side panel. You can really see what's going on. And aside from these big levels, what I've been watching for is just intraday trend. Is it rolling over, or is it increasing? And that can give you a nice bias if you're actively trading. Bitcoin. Interesting formation setting up. We recently had this rug pull, and now we're consolidating in a bearish pennant type pattern. You can see it. I've got it drawn in here. And what I've done is simply measure the first leg down, which was 12,000 from 40K down to 28K, and then extended that to find a measured move target, taking 12K from 30K if it breaks down, and that projects down to 18K. And of course, remember, at 21K, Michael Saylor gets his margin call. So that's more of an aside, but interesting nonetheless. So let's dive into SPY. We had that 3-bar reversal down here, making our way up. Today, you can actually see here in pink, we recovered the 8-day, which is short-term bullish. Whenever you recapture a moving average or a level, that's bullish. We recaptured 405. Today, I think we need to hold 405 to feel good about extending this rally. It's going to get a lot tougher here between 410 and 415. We not only have these prior lows to contend with, we've got the falling 20 EMA at 413. So keep those numbers in the forefront of your thinking, top of mind, if we get a push higher. 410, 413, and 415. You break out of 415, then you got to move up to the 50 and this open gap. And, if we got that, I mean, that would be phenomenal. That would check this box off of an open gap above that hadn't been filled. Fill that gap, run into this resistance here where got rejected all these times. You can see here we've got a large volume over price profile coming in. I think getting above 420 would be really tough. And if we made it that far, I'd certainly start thinking about scaling into shorts. SPY, 60-minute, had the little gap up. Now we are in this gap here up to 411. You can see that we've got a downtrend line to contend with this morning. And then we get into this region we just talked about, and a break above 415 would set this thing going. Just want to talk about psychology for a second. On these rallies, and one of the reasons, aside from the technicals, is you know how the market likes to suck people in to either long or shorts at exactly the wrong time. And what I was thinking of is, does the market keep squeezing higher and create a little bit of FOMO out there where, oh my God, this thing is still running, and I've been loading shorts, and squeeze those people out, get some people, more people to pile in, and then of course pull the rug. So I've got that in the back of my mind as well. But price talks, we'll see if we can push above the downtrend line and this overhead resistance. Qs, same kind of scenario. We recaptured 305. We recaptured the 8-day. I think your next objective is 310 at these lows, and you've got the declining 20 that comes in at 313, and then the big monster level is this. It's marked as support here. I didn't change that. It's resistance from 317 to 322. That would be a nice objective. If we popped 322, then we're going to go up to the 50, fill this gap, and then that would be a great place to layer in shorts if we made it that far. Detail on the 1 hour. You can see here that, on the 1 hour chart, 302.50 is really a level that would have to hold here. You got a ton of resistance right here where it had trouble breaking through, and back here as well. You've got your high volume over price bar here which should act as support on any wobble here in the morning. So if there's weakness, but 302.50 holds, that would be a good place to try a long if you're, not in already. IWM outperformed the market yesterday, up 3%. The broader averages were closer to 2%. Here, we broke above 180 significantly. We've got the 20 that comes in at 184.30, and then we've got a downtrend line and all this trading resistance at 187.50. I think that would be that's going to be a tough nut to crack on the upside for IWM. I don't have it here, but there was a sizable gap between, let's just call it 180 to 183. That got filled yesterday. Now today, if we can break above 183, I think you got yourself a good long, and that would open up for a move up to 187.50, and that corresponds to the level on the daily chart. I would be getting pretty concerned on a break back below 180. I wouldn't want to hold longs below 180. Might come down here to fill this gap, even come down to 176, where you've got this large volume over price bar. So, anyways, but IWM small caps did really well yesterday. Facebook. Now on the FATMAAN names, what I've done is drop in the fibs in black, just so you can see from the top of the move to the bottom of the move where those lie in conjunction with the technical resistance. You can see here yesterday, Facebook just couldn't get anything going. I think your level there is 202.50-ish. If you can get a break above that, I think you got a good chance to get to 209. That would be your 618 retracement. Might have a tough time getting through that, but if it did, then 212 and then on up to 222. Notice the high volume over price bar here that lines up perfectly with technical resistance in the 618. I think you'd be looking for 209 on a breakout above 202.50. Apple broke above that 147.50. I think that's the level that needs to hold today. Got a large volume over price bar here acting as support. Upside targets 151.50 right here, and then something closer to 154 on a breakout above. That would line up with the 50% retracement, and then you've got your next level up at 156, which is your 618 retracement. If you got up to 159 into these large volume over price bars, I think above that is asking a lot, and that would certainly be a place. Depending on the price action, if you see a stall or something at one of these levels, then taking all things in consideration, maybe a place to try a short. Tesla, good day yesterday, 5%. Doesn't look like much on the chart. I think if you can hold 750, the door's open for a run to 800 here at the 38% retracement levels. Series of higher lows. You got a low here, a low here, a low here, all rising. And what really needs to happen for any significance is to take out this high, and then you'll have higher lows and higher highs. So I think as long as it holds 750, the door is open to 800. Microsoft, good day yesterday. You can see here we've definitely got higher lows and higher highs. Nice uptrend channel. I think today your go no-go line is 267. It had hesitated there early in the morning, broke above briefly, but then came back and then ground back up towards the highs. 267, I think, is your pivot, and you would be looking for a move to 270 and then 275 to fill this gap, come up to the 618 retracement, and come into these higher volume over price resistance levels. I think asking anything above 276 would probably be a stretch. Our little Amazon trade is working well. It was up 4% yesterday. We're long a spread up to 2,400. If this rally extends, what I'm looking at is did we get the far strike right? Because right now we're only $100 away. It would be a great trade, don't get me wrong, but you break 2,400 and then 2,500 comes up real fast, and that's when you look at the whole scope of things, that would be nothing because it only corresponds to the 38% retracement level, and that's well within reason, and you've got a large volume over price bar here. So depending on how you want to play it, you can just say, once it gets past 2,400, hey, we had a nice 150 spread that paid. Just congratulate yourself on the win and then just see how high it goes. Or you can rotate, stay long for higher prices, and you've got a gap that starts here at 26.25, so that one's working. Google, we're long Google as well, kind of working, kind of not. I think we're in I think it's 23.50, 24.50 call spread for next week. So hoping for this gap fill and move up to the 38% retracement level here. And that would be a place where you'd have a big decision point. If it breaks above, then you could certainly come up to this resistance zone at 25.50 at the 50% retracement level. So there again, depending on the price action, if this looks like it's going to work, then you could buy some extra time, reset your strikes, and target move to 25.50. Netflix didn't do much. Well, it was up 2%. Doesn't look like anything on this chart just because of the scale. But as long as it holds this 187.50 type area, I think the door's open to 210. Really just chopping in this range, but that range is wide from 170 all the way up to 210. I haven't been messing with Netflix at all. At a certain point, you got to decide what, how much bandwidth do you really have, and you got to narrow your focus, to the number of stocks you feel like trading and all that kind of stuff. So I haven't been focusing on it. But if you are, 187.50 is the line that it needs to hold. Semis had a really nice day yesterday, up 5%. Big gap up that I've marked here, 233 down to 228. Your next objective is at 240, which has been a big line for us in the past. We had, there was resistance here, and that was the bottom of a trading range back here. So that's a big level. If you pop 240, then it may flash up to fill this gap here all the way up to 247 at this high, at the high of the trading range. That would be a really nice result for the semis. ARCF, the reason I show these is because I want to find a good level on this rally to recycle into shorts. I think that, again, these are going to return to form on a down leg, outperform to the downside. So I've got some levels here. You know, if it got up to 19.5 at the 618 retracement level, you know, depending on what's going on in the market and all that stuff, that is a level that I've got my eye on to recycle shorts. I've also got an alarm set at 1750 if the whole thing falls apart before it makes that rally. I think on a break of 17.5, I think you're going to come back down to test these lows at 15. ARCG, haven't been paying a ton of attention to this one. The option chain is not that great, but it could still prove to be a nice vehicle. We're getting close to the 618 retracement level. You can see along this line of 33.75, you've got a lot of traffic here. You've got a large volume over price bar here. That might be a tough nut for ARCG to crack. If it does, you could get a move up towards 37.38, which would be great for recycling into a short. But I would keep your eye on 33.75. And if you want to play it to the long side, if everything goes hyper bullish, you can get long at that level, because once you break back into this trading range, I think you could get a quick move up towards 37.5. ARC-K is, for all intents and purposes, a Tesla proxy. I keep both of them on the screen and kind of watch them. If ARC seems to be wavering, but Tesla is going higher, I usually am a little scared of being short. But when I see Tesla going down and ARC rolling over, I feel a lot more confident in that. You've got a level here just below 44. If you can break that on the upside, I think you can find 47 right here at this resistance level, and that would be a spot I would be looking at. On a break above 47, I think it could find 52. So if you want, you know, a super beta long and you see Tesla going up, you get a break above 44, I think you can be long and look for 47 and possibly 52. ARCW, setting up at an important level here at 56. You get a break above 56. I think you could make a quick move up to 62. That would align with this prior trading range. It would align with the 618 retracement level, and it would align with this massive downtrend line. And, you know, so that would be, you know, this down move, a kickback move, basically revisit the scene of the crime, right? Here was the scene of the crime, a breakdown from this trading range, move down, revisit the scene of the crime, and fail. So that would be a high probability short if price made it up to that level. And if you're a sharpshooter and the rally extends, you could get long at 56, look for 62, 63, exit that position, and then recycle short and see if you could get a big down leg back into 46. That would be, you'd be feeling pretty good about yourself if that scenario played out. So let's wrap up where we're at. I think the odds are good of, even if we tread water today, I think there's a good chance that this rally extends, squeeze out a few of the guys that are trying to reshort this already. I'd like to see a flash move on the oscillators up into the 60 range in conjunction with price stalling at one of those well-defined resistance areas that we showed. That would be a good place to recycle into shorts. Let's watch Target carefully. Let's watch Lowe's carefully. See how those guys do as far as retail goes, and watch oil inventories at 10:30. Energy, strong. Jay Powell kind of knocked back oil yesterday in his, comments. That's the only thing I saw. I didn't see any other kind of news out there that would knock oil down. But they seem to be buying every dip. The dips are shallow. You can almost throw a dart in the oil patch, and they're doing really, really well. And I saw a little macro note. There's no CapEx in the oil sector. Nobody is rushing in to punch wells. So I think this supply deficit is gonna persist, and the big catalyst out there is if Chairman Xi over in China throws in the towel on locking down the country on COVID. I think oil, if that happens, does a moonshot, barring any other changes out there. So that's a total unknown. I think you got to play price as it trades now. I'm long oil. So let's see how that goes, but still really bullish on oil. The fertilizer stocks, material stocks did great. The base metals, aluminum, copper, still seem a little bit weak. So all those themes that we've been talking about continue to play out in the energy sector. So let's see if we can get an extension to the rally. Hope you have a good day of trading. If you're new to the channel and you like the analysis, you can tell it's all technically driven. I do my best to give you objective trading levels, and I keep a narrow focus on stocks that have good option chains that I can focus on and own the levels rather than jumping all over the map. So if you appreciate that kind of analysis, please hit the subscribe button, the post notification bell. Give me a thumbs up. I'd really appreciate that. Jump over in the show notes. You'll find a link to drop in your email on the blog site. That way you'll get my content morning, noon, or night, and I'll certainly send out notes and trade ideas when and if I see them. You'll get those right in your email box. You'll also get an invite to the trading room. We'd be glad to have you. And thank you so much for the rest of you of supporting the work. I really appreciate it. And pass the link along to somebody new in your trading circle to help me expand the channel and hopefully benefit those that participate. So thank you. Have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.